need to let me share it.
Yeah, you should now have permission, Will, to share your screen. So just for everyone that wasn't here on Monday, this is just a bit of an update on the cyber market and kind of what's going on with pricing, with capacity, and an update on the product and kind of where we see it going into the next year. So Will's got a PowerPoint which he's going to run through with everyone, and then feel free to ask any questions in between at the end, and hopefully you find it useful. Over to you, Will.
Is that working, Sammy?
Yeah. There
we go. I've worked it out
straight away.
Morning, everybody. Thank you. I say morning, afternoon, really. I'll try and I had a little bit of practice at this on Monday, so I'll see if I can keep it short and concise for everybody. Give you the screen. Actually, maybe just to begin with, if we could ask everybody to pop themselves on mute, so we can kill any background noise. Sammy, you might be able to do that for everybody. There we go. Great. And now this won't let me go back, so now I know. Right. There we go. Right. So give you a quick overview of who we are, what Paradigm is, the team, for those that don't know it. The real key is a talk through on the market conditions, which have changed dramatically since we set the facility up in July, August last year. We didn't really get running in the Australian market until the back end of the year. But even so, the change in the market conditions from January this year to today has been huge. So talk you through a bit of that. We'll skip over the sales opportunities bit quite quickly. Highlight the 7 common problems that we find with clients, risk posture, cyber hygiene, that sort of thing. If you don't have certain controls in place, it's quite hard to get insurance. And unfortunately, we're going to be treating that no differently to our peers. How do we do that? Through the statement of fact, talk you through that. Give you a quick overview of the incident response panel and the policy coverage. And then we'll probably just take some questions and leave it at that. And hopefully the idea is that everybody will understand how the renewal process works for the facility, because we're obviously coming up to renewing quite a lot of quotes for you guys. What our outlook looks like, which I think, for now, it feels positive. We're coming up for a binder renewal in January. We're going to have to bring some new capacity on board, which we'll talk through. But everything's running as we'd hoped it would. So it's good on that front. So Paradigm is the trading name of a JV between Paragon and Carroll's. Carroll's do the technology and the platform administration, and Paragon do the underwriting. We have cyber insurance, tech PI, albeit the tech side has probably, I'd say, not dropped off, but the appetite has reduced. This is a cyber-focused product, but we can write sort of more vanilla sort of software engineers, website designers, that sort of thing on tech PI. Tends not to be so important for your market because everybody's buying, package, PL, GL, E&O policies for tech companies, so which we can't offer. We've got 5 million limits, and we're currently 100% backed by Tari and Consortium at Lloyd's. In January, that will definitely change because they're restricting their capacity on our binder. So we've got to bring in somebody new to make sure that we can keep offering 5 million limits and we can keep on growing as we want to. Market conditions. Actually, the team, just for a quick high level there, Sammy and I obviously run the show, but from a day-to-day basis, Sabrina and I are on underwriting and the platform side. I know that some of you have problems with logins or getting their big red cross in the box. As annoying as it sounds, 99% of the time, it's probably due to user error. And so if it's happening consistently, we'll just do a quick session and work through where the problem's coming up, because we tend to go fix it on the back end and then the same problems keep happening. So if ever you feel like you're getting the big red cross saying the system's not working, let us know, and we'll give you a quick 5-minute run through so that you can get your quotes easily in the future. Nicole on claims. She's been moderately busy, but thankfully not to any super high levels. the process works, the system works. Hopefully you won't see too much hurt. Sales opportunities, no, that's one too far. Market conditions. So cyber market's been going about 20 years in anger, but really probably 15 with any real venom. These are the worst market conditions we have ever seen in this market. And I don't know how much of that's translating to the Australian market. I certainly gather that it's filtering through. We get some feedback from some of our competitors. We heard from Emergence the other day that they were seeing rate increases around 50% on their book. What that means account by account obviously differs, but the claims climate has changed. Ransomware, business email compromise, massively on the up. I think business email compromise is still the most common. So that is either malware in your system, compromising email inboxes, or more often than not, phishing. So how does the malware get in? Because an email comes in and someone clicks a link. That's still the most common way of getting in. However, ransomware is prevalent and driving loss ratios up, because while business email compromise losses aren't particularly large necessarily, the average might be $100,000. Yeah, the average for ransomware claim could be north of $500,000 to $1 million, and the frequency of those is now quite high. So the concerns are still around people and processes, obviously, and access controls, which comes up quite a bit in this talk, and it'll come up in the statement of fact. But the real problem is this burn speed. So where we might be used to liability claims running for a year or 18 months before they settle, because the underwriter has plenty of time to reserve, it might cross over reinsurance renewals for the insurance community. That's not happening with ransomware. You go home on a Friday and everything's good. By Friday evening, there's been a ransomware event, and by Monday morning, you paid $1 million. I mean, it's literally that quick. And obviously, your client wants a really quick service too, because they don't want their business to be offline and for their reputational damage to soar through the roof. So it's a real problem for clients and insurers who are trying to model it and trying to make sure that they're writing premium adequately to the risk. And so when you look at the loss ratios, this is what's really driving the rate increases in the hardening market for cyber, which is that in the space of 1 year, they went from sub 30% at Lloyd's to plus 70%. So if you think that a Lloyd's syndicate basically doesn't make any money past about 65 or 70% loss ratio because of all the acquisition costs of providing insurance, and then if you think that you were one of the carriers that had 100% increase in your loss ratio in 1 year, there's going to be quite a knock-on effect there in terms of the number of insurers that need to adjust their rates. Now, the reality is that that's now gone even higher, and we're probably expecting 80+% in 2021, leading up to as close as 90 in 2022. And that's obviously global. That's not just Australia. That's not just the UK. That's the US as well, and the European market. And that's for all sizes of insureds. So what does that mean in terms of a market increase? And it's a bit banal to just say it's 50%, but that is probably what we're seeing overall in the market at the moment. Obviously, smaller risks, a 50% increase on a $1,500 premium isn't so damaging, but for someone who's paying 50 grand, that's going to be quite a big uplift. So it's not always 50; it can be a bit less, it can be a bit more. Depends on the industry sector and the claims and that sort of thing. So limited capacity. Every insurer is now restricting their limits. So if we're only looking at 5 million limits on the binder, it's not such a problem. But if you look in the wider market, some of the accounts that we've been placing in our broking team, we had 700 million of insurance last year. We're anticipating 500 this year. We bound 600 last year. We bind 480 this year. Someone paid 3 million last year. They're paying 8 million this year. So for the privilege of less capacity, they're paying, more than double the premium in some cases. And that knock-on impact happens obviously because if every insurer is cutting from 20 to 10 or 10 to 5 in terms of line sizes, then you end up with a concertina effect throughout the program. So again, hopefully not a problem here because we're talking about 5 million primary limits as a max. Tightened underwriting criteria happening across the board. So barrier to entry is now the problem for most insureds. If you can't demonstrate that you've got the minimum entry level requirements of security hygiene, then you might just not get insurance at all. Our goal is if you can't meet some of the criteria, we'll try and work with you and help the client either get on board in a certain time frame, pre-bind or post-bind. Worst case, second worst scenario is we have to put a sublimit on for ransomware because there isn't the right or appropriate controls around multi-factor authentication until they are in place, and then the sublimit can be removed. And obviously, in some cases, you just can't offer insurance. So you get an idea of our hit ratios. We've probably quoted, between Australia and the UK, something in the region of 800, 900 risks. We've seen 800, 900 risks. We probably quoted 500, and we probably bound just on the 200. So hit ratios are still great, which we're really pleased about, and thank you for all the support. But decline ratios are also quite high, more in the UK, I would say, than in Australia, but that's largely down to the tightened underwriting criteria. We won't talk about restricted coverage. I've kind of already touched on that. So for you guys, the focus here is just being ahead of the renewal cycle and preparing your client. At a base level, we think 25% is probably going to be the norm. But if you're in a tough industry sector, or you've got a 5 million limit and you're in a tough industry sector, then it could be a lot higher. 100%, for example, last year we were, because the binder is set in the prior year. So we wrote the rates for for last year's binder period in the end of 2019. And the rates back then were significantly lower than they are today. So we could do a primary 5 for $5,000 at the lowest level. That's just not sustainable. So, that would definitely get something close to 100% increase. And we wouldn't be expecting 5 million limits to be going for a great deal less than 10 grand. There might be some cases where that is possible, but that's an example of what 100% looks like. It's pretty unlikely, unless your client's grown by 400%, that you're going to get a 100% increase on a 30 grand premium or a 25 grand premium. So marketing the renewals, as much as we hate to think that business is going to leave us and that we can't make our product competitive, we obviously need to make sure that you're mindful of that. And if you need to market your renewals, please do. We want to make sure that we still offer the most competitive product we can, and hopefully it's the most competitive product you can access. And we look for your guidance on that. If there's a bit of a steer that you can give us on where the market's going, if we're too expensive and everybody else is miles lower, maybe there's a reason for that, and we walk away. But equally, if there's a chance for us to stay competitive, we want to. I'll breeze through this. We've already talked through the claims concerns, burn speed, that sort of thing. The points in black on the right, and I think we're going to share this after the call, are just some explanations. Ransomware is particularly prevalent because it's not targeted. So it's not like a client with loads of data is a target just because he's got loads of data. Every client, irrespective of how much data they've got, is a target to some level. The loss just might, or the ransom demand might be a bit higher if you've got a heavy data set. People and processes, I think we know that people are the weakest link, as much as we wish that they weren't. We use our statement of fact, even as a retail broker, actually, when accessing our Paradigm product. We use our statement of fact as a guideline for a lot of our clients. Can you say yes to all of these things? Because if you can, then you're doing everything right. If you say no to any of these things, then we really need to ask why. And there might be a good reason for it, but if there isn't, then we at least know what the litmus test for quality hygiene looks like. Some of the rebuffs that we've still been getting, my IT department is outsourced. 9 times out of 10, that's not a good thing. If the IT provider has got some kind of systemic issue in the software that they've been using, or in the processes or protocols they've been deploying on people's networks, then the chances of one incident impacting 100 clients is quite high, and your client will just be one of those 100, and will have to get in line with everybody else to be fixed and to perhaps get their contractual damage payout. Whereas obviously if they buy an insurance policy, then it can restore their systems directly and then recover any kind of costs via subrogation to the IT provider. So I'm a small target. I'm a small company. I'm not a target. Just not really that relevant now with ransomware. It doesn't really matter how big or small you are. I outsource my payments. I'm not exposed. Your customers won't think that. They're not going to care that there's a payment processor in the chain. They're just going to care that their data has been compromised, and they're going to come straight to the client, not the processor of the data. So there's usually an answer to most of these questions. And if ever you've got a discussion with one of your clients and they're really pushing back and maybe it's a new sell and it's just not going very well, then tell us and let's see if we can help provide you with some of the tools to unlock that client. 7 deadly sins. This is, what are the 7 deadly sins? They are the things that, if you don't do these 7 things, then you are committing the 7 deadly sins. That's the principle. If you've got sensitive data, make sure it's encrypted. Make sure you've got multi-factor authentication on remote access to your network. Became a big topic during lockdowns with remote working. Core applications like Microsoft Office, are you using MFA to get into that? And if you've got a bigger organization with lots of privileged users, are they using MFA to access the domain level, the admin level of the network? Training and awareness. If your clients aren't doing this, we can help with this. Excuse me. We partner with a company called Kind, who do some nice external threat modeling. And we basically just use the domain name of your client. We type it into the system. It can tell us what ports are open, what internet-facing network architecture is exposed potentially. Maybe something's not been patched and it should have been. Maybe there's limited security on some of the email traffic, that type of thing. We can pick up on that and share that with you. We're actually sort of phase 2 of our product is to build that into the quote and bind stage. So you'll be able to sign your clients up to a free monitoring and assessment tool that runs constantly on their system, and they can give it to their IT guy and it gives them a feed real time rather than a snapshot, which is what we can provide you now. So we're quite excited about that. We can do phishing exercises up to 25 emails. If any of your clients don't do phishing training, we can do that for you for free. Send your client a link, they click the link, put the email addresses in, and then over the next week, those email addresses get randomly phished and the results get shared with your client. So quite a helpful training exercise. Email scanning and filtering, I think that's pretty obvious, tends to be for larger organizations as well. Endpoint detection and response, again, for larger businesses. Segregated backups, again, for larger businesses, but we would expect almost every customer to have some form of backup that's not just stored at their premises on their server, whether it's in the cloud or whether it's with a third party or whether it's offline. There should be some kind of break there so that if malware has got into the client's network, that it's not permeated through into the backups, because it might get into the backups that are on premise, but it'd be very hard for it to get from your premise onto, say, a cloud network without MFA in place, or onto some kind of third party network. Patch management. So this is just making sure that your client or their IT provider are patching critical patches within a timely time frame, which is usually 30 days as an absolute maximum. So we can help you navigate this with your clients. This will come out through the statement of fact, which is on every quote. Please do make sure if you get a quote from us that you share that statement of fact with your client ASAP. We've had a fair few cases where people have got quotes last minute, can't be helped, and then the clients come back, said, I want to bind on the same day, and the statement of fact doesn't stack up and we can't bind. Or we bind for a week and then the client just can't, they can't complete the statement of fact appropriately, or they can't upgrade their network appropriately. And we just end up in an awkward situation. So try to get your clients to look at the statements of fact as soon as you get a quote out. If for some reason there's a hold up on your quote, it's being referred, just ask us to tell you what the questions will be and we'll share them with you. This is what the current baseline statement of fact looks like. I'm not going to go through this in detail. But you can see, encryption of sensitive data on portable media. We try to simplify it so you don't have to encrypt a hard drive and a database. It can be one or the other. Access control provisions, MFA for remote access, and Office 365. Those top 4 ones are pretty critical. If you say no to any of those, we're going to be asking some questions. If you say no to 4 particularly, which is the multi-factor, then we'll be asking the client to put a roadmap in place to implement that. Hopefully they can do it quite quickly. It is usually quite quick and not that expensive to roll out for an SME. But if for any reason we get issues with these top 4 questions, then we're likely to have to put a sublimit for ransomware on the policy. The other ones I think are all relatively self-explanatory. Okay, so the appetite. Our appetite hasn't changed, just the pricing has changed over the last year. And I would say that our base pricing has probably only gone up between 15 to 25%. And then there'll be certain industry sectors where we're going to have to leverage a higher increase. So on renewals where the premium base was particularly low last year, we're going to see some change. But we should still be competitive versus CFC, Dual, and Chubb. I think, from our perspective, we have the most respect and really think that, the top level insurer that we want to always be competing with is CFC. They do a nice job on claims, they've got a good form, and they're hopefully competitively priced. We know our form competes with CFC. We know that it's better in a couple of areas, and we know where it's not quite as broad, and that's on crime, where we don't give 250 grand sublimit for crime, we give 100 grand sublimit for crime. But that's not social engineering, which we do give 250 grand for, and it's not push payment fraud, where we give 50 grand, which is the same as what CFC do. So really, with CFC, it should be just a case of price. And perhaps access, they still do underwrite, like a manual underwriting process in the background, whereas for us, we try to control that through the statement of fact. So that should really be the only difference between us and CFC. We have an outsourced vendor panel that we think do a really slick job through Clyde & Co. CFC do theirs in-house to begin with. Commission, 25%. So even in these pretty turgid conditions, we're keen to try and make sure that you guys still get a fair crack on the commission. The product is definitely market leading. We know that because the Paragon broking team use it all the time, and a lot of the markets don't like supporting it anymore because it hasn't changed over the last 2 years, and everybody else's forms have become narrower. So that's a good thing. Revenue band is still 250 million. It's 250 million pounds, actually. That's a typo. Up to $400 million is the threshold for the facility. The bind online is up to 50 million. Unless you're an educational facility where it's 40. So basically, if you're above 40 million and you're an educational facility, you get referred. If you're above 50 million, you get referred. Everything else within 50 is bindable online. Up to 1 million records, but no more than 250,000 of any particular type. So if you've got a client with 350,000 PHI records, it's going to be a referral. We use the statement of fact, assumed at quote, and attested at binding. So just making sure that any variations to that are confirmed to us well in advance of inception date so that we can iron that out with the client, or if we don't want to offer terms formally, that we have the time to be able to do that such that it doesn't put you in an awkward position. The crime, which we mentioned before, cyber crime in our product is, really it's crime that belongs more in the crime market, if you ask me, but we accept that there's a certain buying attitude towards cyber where the crime is part of that rationale. This is corporate impersonation fraud, the D's and O's, corporate bank accounts, the personal accounts of the directors of the company. If they're compromised, then potentially there's a cover here. Now, of course, there's a question in our statement of fact that asks about multi-factor authentication, and the chances of there being a corporate banking fraud that you need to cover under your cyber policy are super, super slim. So I highlight that because it is one area where CFC give a bigger limit than us, but it's probably also the one coverage grant under the policy that we think is the least important, because it's not social engineering coverage, which is really important, and that has a 250 grand limit. All PI quotes under our binder are referrals, unfortunately. But as I mentioned at the beginning, we are tightening up in that space, as I think a lot of carriers are in London. And obviously, dating, gambling, airlines, payday loans, debt collection, medical devices, that sort of thing. Criteria is basically split between revenues. There's a different statement of fact for those that are above 50 million. And if you are getting on towards 100 million or 80 million, let's say, you're quite likely to get a supplemental application form, which is going to ask your client to go into a bit more detail. So again, you don't really want to be leaving that till 1 minute before binding to get that information over to your client, because the supplemental's got a fair bit more detail in it. That was the super quick run through. I hope not too boring hearing the same voice for half an hour. I think one other thing is that we tried to preload a lot of the renewals onto the system, and we've got a process in place now. So if you've got a renewal, you should be getting a notice from us 60 days out to say that you have a renewal coming up. Mindful of what's going on in the market conditions, you don't want to be told 3 minutes before binding that your premium's gone from 8 grand to 20 grand, or from 1 to 4, or whatever the number is. So we're trying to get ahead of that, and prompt you guys to speak to your clients at least 60 days out from renewal. Because obviously, if we get the statement of fact qualified a month out from binding, then that would be great. Everybody would be really happy with that.
Any questions, guys?
Yes.
Hi,
Hi, how you going? Good.
Yeah, good, mate. How are you?
Good. Yeah, very well. I will come on to a question in a minute, but I just want to let everyone know about some lessons we've had recently on this, which I think we'll cover off partly, but there's just some things that you really, really need to focus on certain areas. So we've just done the renewal for the PSC agencies, so for Chase, Breeze, and all those sort of things. MFA is really important. It's coming to everyone. It will be rolled out to the wider group for using remote access. NatBars has had to rush through in the last week the MFA upgrades for the agencies. So they're now doing that because of the cyber insurance. It for larger organizations or mid-sized organizations, it's not so much turning it on, that's very quick, but it's the training that you've got to give to staff to use it. Will, do you just want to explain what that MFA means to people? Because I think a lot of people don't really understand.
Sure. Well, if you think that you might go to your computer terminal, put in your username and password and enter and get into the network, there's no second factor to authenticate you there. You've just used your password. So MFA is implementing a second factor. So it might be a little widget on your phone, like an authenticator app that spits out random numbers every 30 seconds. It'll prompt you to put that in. It could be a text to your phone with a fixed number. It could be one of the, back in the day, we used to have those little Citrix handheld widgets that constantly changed. So it's just verifying your identity. Second factor. For larger organizations, it needs to be pretty sophisticated. So it has to be a randomly generated token. For smaller organizations, it doesn't. That's getting into the weeds a little bit. I mean, it shouldn't be too expensive to roll out. If it's on Microsoft Office, it's actually free. The client just needs to turn it on. But if it's for remote access, then if you're using Citrix, you just have to pay a slightly higher license fee to get MFA.
Yeah. So what I would say is that it goes back to talking about the statement of fact and how important it is to get that out early to your clients, because the statement of fact has changed from the statement of fact last year when they first took out the policy. So what they agreed to last year is not necessarily the same as it is this year, and you need to make sure that they are now also complying with the renewal statement of fact.
Yeah, and if you want, you could even go on the platform and download one ahead of time, so you've got the latest version there.
Yeah.
But that was all I wanted to say. Thank you.
Yeah, and well, I think you can use it as a kind of consultancy. You as your retail broking efforts stray to try and advise your clients a little bit wider than just buying a policy. You don't need to be super cogent about the statement of fact. You can just provide it to them and say, look, we work with lots of cyber insurers and these common themes are coming up all the time. So hopefully this is of use to you, because if there's anything in here that you're not doing, then you can question that. And if you reach an impasse and they don't think they need something and it's a problem for the insurance, then let us know and we'll try and help you out.
Yeah.
Thanks, David.
Yeah, we have used that as a sort of good risk management guide for some of the clients, and most of them have been really receptive about switching MFA on and how to do it. And it actually just makes their network better. It makes their security better.
Yeah.
So most clients will do it. It's just they need a little bit of time to implement it and train people. And that's the important point.
Yeah. And I might also add that if the one area where it's sometimes harder is in the more industrial industry sectors. So you might have like a car manufacturer or a farm machinery distributor or something like that, farm dealer. And the revenues are huge because obviously the kit they're selling is super, super expensive, but the margins on their business are quite small. And so the amount of money that they apply to cybersecurity is probably not commensurate with the revenues that they're getting on a top level. So, you know, if you've got a client like that, I would definitely get in there super quick with a statement of fact so we can pick up any nasties before they become a problem.
Any other questions?
I've got one at risk of looking or sounding like an idiot, but I don't mind. You guys are similar to ATC that your limit is an aggregate limit. Is that right? The limit that we select?
Yeah.
I think that's different for CFC.
It is. Yeah.
Okay. So sort of when I've been comparing a CFC renewal or a new business to the paradigm, I'm having to increase the paradigm limit to sort of counter for that. Is anybody else sort of looking at that or?
No. No, CFC have been doing that for a while, and they're probably one of the only markets that does it. And I don't know how long they'll keep doing it. I think the reason that, to be honest, the reason that they do it is because they've had very, very few claims that have taken a limit twice in a year. And so it's a good marketing exercise for them. Whereas and they obviously have enough capacity on their binder for a double limit, whereas we don't. So for example, if we had a 5 million limit, we can't give you a 5 million each and every claim because we don't have 10 million or 15 million or 20 million of binder capacity.
Yeah. Okay. Cool.
And that's one of the reasons that we have to try and stay competitive, because that's something that we can't, that's one area we can't compete on. So at least if we can be competitive on price and offer a product that is broader in some areas. So for example, our BI coverage is meaningfully broader than CFCs. Our rep harm coverage is meaningfully broader than CFCs. And I think the really big one is that we don't restrict around wrongful collection, which for CFC for years they wouldn't offer coverage for, which is essentially when you fall foul of a privacy regulation for the way that you collect data, as opposed to you've actually breached people's data. That's quite a common regulatory investigation. The costs associated with it are quite high, and that's something that we cover affirmatively that CFC don't. So there's a few areas.
Do we have a cheat sheet?
We do, but it's obviously point in time, so we can share that with you. But
that would be great.
Yeah,
we did one a few months back, which I can dig out and send over.
You'd need to check those points against any current forms issued by. So I don't know if CFC's updated their SME wording to include wrongful collection, for example, but last time we checked, they hadn't.
Okay, yeah. Thank you.
Thanks, Catherine. Any other questions from anyone? Cool. Well, this is recorded, so we'll circulate the link. Please feel free to pass it over to anyone in your teams. And anything that comes in afterwards or any questions after that, just give one of us a shout. Probably will, because I'll probably just forward it to him. But yeah, look, thank you for taking the time out of the evening to do this today, and good to see some of you who I haven't seen in a long time.
Yeah, cheers, guys. Nice to see you all.
Cool.
Cool.
Thank you.
Thanks, guys.
Bye-bye.
See ya.
Bye.
it